Hey, good evening traders and welcome back to the channel. Today we're going to look at Centene Corporation. Ticker symbol is CNC. And I want to share this with you because I'm seeing some interesting things in the charts which lead me to believe that this could be a very good swing setup with very minimal risk and pretty decent upside as we move forward into the final fourth and fifth wave. So here's kind of how I see it. I wanted to share it with you on the larger time frame, zoomed out, so we can see it from this perspective going back all the way to 2015, right? So we had this consolidation here, this nice move up, consolidate or move down, and then to a final high of about almost $100. And then from there, we've had this massive decline. And the way I see it from an Elliott Wave perspective is as follows. So the first impulse we had was this string here. Then we basically established a 1, 2, 3, 4, 5 wave impulse. And then from there, well, the way I see it is we went into a corrective A, B, C pattern. And now we're starting our next Elliott Wave down. Okay, our next impulse move. So I see it as a 1, 2, we're in the process of making the 3 now. It could terminate and finalize here, or it could come a little bit lower, in which case I have additional levels, which I'll share in just a second. But I see this as a massive third wave impulse, which will then obviously resolve to a 4 and then ultimately down to a 5. So let me now show you on a zoomed in look how I'm seeing price unfold and why I think this is a good level to initiate a position or an allocation to your portfolio. Okay, so we have this kind of 1, 2, 3, and what's interesting here is we had earnings just about a week ago, right? But before earnings, we had this massive gap down. It probably was a pre-announcement or pre-guidance or something to that effect. I didn't spend any time looking into it, but I would venture to say from a move from $56 a share down to a close of 33 in one day has to be some type of pre-announce, right? So you have a massive gap down and then massive sell volume, and then we had continuation all the way into earnings. Now, what's interesting is during earnings, if I go to the 24-hour chart, right, on earnings day, they reported the following. So we had a beat, a slight 10% beat on revenue, which is good. They did $48 billion in the quarter versus an estimate of $44 billion. However, on earnings per share, they missed quite substantially. So that was down 243%. But the interesting thing here isn't that. It's the fact that it was bought up, right? So if you look at the earnings day, first of all, going into earnings, we have bullish divergence. So you had higher highs on the RSI, lower lows on the price. Earnings came out, probably wasn't as bad as everyone thought, even though they were bad. And then sold down all the way to $22 and then closed at $28.42, right? Then from there, we had a retrace. So this is effectively a bottoming tail, but on the daily, it doesn't show that, right? So that's why I always love to look. It does show a great reaction on earnings, shows open here and the close here, right on to the 9 EMA. But what it doesn't show is it doesn't show this, right? The after hours shows the sell down on the morning and earnings, and then the obviously the gap or the move back up. So on the 24-hour chart, that's essentially almost a bottoming tail. It might qualify, but either way, it's a bullish hammer reversal candle. Then we have the sell back into the 50% level, which aligns, by the way, and that's why I wanted to show this zoomed out look. It aligns into the 2015, 2016, 2016 essentially pivot lows before we made this massive move. So we're into some really, really good support. I love the support here. Can it go lower? Of course it can. But could it jump from here just as easily? Absolutely. Are we oversold? 100%. So I always like to go into my swing trades knowing that there's additional, I could be wrong, and there's additional downside. So I've isolated this additional add level, which would be my second add level. So I'm going to go into this position at a 1% allocation to portfolio with intentions as it goes against me, or if it goes against me, of adding at the $20 and basically 2050 level. If that happens, I do a 1% here, I do a 1% here. Guess what? I'm going to have a 2% allocation in this area here. So if it goes down aggressively, we snap back, we get the move we're expecting. How amazing is that? I mean, we could just get it out of the gate and we can start our move up and then come down. Or alternatively, if it goes against us, we can dollar cost average here, get our 10% move, or get any move, and our cost average is here. So hopefully you can see my logic and how I position size and why that makes sense. Is we're extremely oversold. We want to create that rubber band effect, right? So that rubber band effect is as it continues to be stretched and stretched and stretched and stretched, the further it stretches, the faster and more aggressive the bounce back is, right? The velocity of that move is significantly greater than if it didn't move down in such capacity. So this is a great counter trend swing trade in my opinion. Again, prepare yourself, it could go lower. They had, bad earnings and bad guidance, but they've beat all this way. It's a healthcare company, just like UNH and everything else healthcare related is down in the toilet. So once they catch a bid and once they become back in the favor, this puppy's going to move, right? We're going to move to a wave 4, which could be as high as, I didn't do the fib calculation, but it's going to be somewhere up in this this $40 range. And then from there, we're obviously going to have our wave 5 impulse down, which will complete the movement down into the it could be 16, 15, 17, who knows? But I'm not playing for that. I don't really care about that. All I care about is this correction that will happen, the bounce back move that will occur, and as soon as healthcare comes back in, or this thing just catches a bid, in my opinion, this is a really good opportunity. So you have your RSI's curled up, it's looking good, a lot of room to run, and so for those reasons and so many more, I really like this trade. So as I mentioned, this is for my personal trading portfolio and to show you what I'm doing with my own trade strategies. Never to be used as financial advice, only to be used as educational purposes. That's a disclaimer I must put on these videos, but as I obviously mentioned, I'm doing it personally. Those are the levels. I like this trade. If you like this TA, you like this analysis, do me a favor and give me a like. Helps with the algorithms. Comment below. Do you like the trade? Do you not like the trade? And then, of course, if you're not subscribed to the channel, please subscribe. If not, you're just leaving money on the table because I'm bringing you these opportunities as they happen in real time, as the market develops. We're all making money. So give me a follow. And I'll catch you guys on the next one. Take care. Bye.